Good morning, ladies and gentlemen, and welcome to the show. Today is January 9th, 2020. Thank you guys for tuning in. Now, let's get the show started. Let's open up the charts right here. Now, what's going on right now is just, this picture says 1,000 words, you know? This is what's going on in the stock market right now. They're all excited. They're all excited. uh, Let's go over to Zero Hedge here and take a look. Global markets soar to record highs on trade, war, world war, optimism. Optimism right now. Optimism is the key word, in the markets. And the market's shooting upwards. But myself, I don't see what they're so optimistic about. The world situation hasn't changed overnight. China, the economy, is going to be very soon a total mess. And, this whole thing between Iran and the United States, it's not completely cleared up, I mean, we see what they do. They'll move into things like, take a look at silver now. It's down today. Down 21 cents on the day so far. It's right back to where it started again, for crying out loud, And the same way with gold. 1786 for silver today. Let's take a look at gold. Gold's 1548, so it's dropped down below 1550 again. They come right back where they started again. When they get scared, they go out and they'll buy gold and silver. And I think what they're doing is they're buying mostly the exchange traded funds, And then as soon as the crisis starts to cool back down a little bit, they sell it, and it's the same. But what this shows us is, it shows us very clearly where they're going to run when the trouble comes. Now, when the real trouble hits, real bad trouble, they're going to run all the more and all the harder to these asset classes. And it's not going to be one of these situations where the trouble looks like it's coming and then it looks like it settles back down again. Trouble's coming in our near future, and it's going to be here to stay, and it's going to intensify once it really starts to hit, and the global economy is going to start to disintegrate. That's what's coming in our future. It's not going to be a little bit of trouble that comes and goes away. We should look at these things that are happening in the world, the trouble that comes in the world, as a warning sign. It's kind of like if you're living near a volcano, and you feel the ground start to shake. The ground might quit shaking. Everything might go back to normal, seemingly normal again. The volcano might quit rumbling, But that doesn't mean that an eruption isn't building underneath the ground. And that's the situation that we have here, sadly to say. Let's take a look at cryptocurrencies today. 209 billion. Now, something that I noticed is the cryptocurrencies is starting to move with gold and silver as a safe haven asset. They're actually running, and I have to notice this. This is my job to notice things like this. Cryptocurrencies is starting to become a safe haven asset, something that they run to when the trouble comes. That's why we saw this move upwards, all the way up to about 212 billion. Now it's back down to 209.4 billion. It's dropping back down now, like gold and silver's dropping back down. Dow Jones Industrial Average today. Now this is where they're all flocking into. This is the biggest game in town. It's like a dice game, on the street. You go around the corner, and there's a bunch of sailors, and they're playing dice, and they're having a great time, betting their money this way and that way. Well, this is a big crapshoot right here. 28,879 points today. We are headed to 30,000, guys. It's up 134 points on the day so far for the Dow. Dow is really hot. A lot of money flowing in and out of the Dow, mostly in. Let's take a look now at, the Fed's pumping this market like crazy. The Fed's got a put underneath this market, and they are pumping this market. They're pumping it with liquidity. In the repo market, and also they're buying short duration treasuries, the T-bonds. Crude oil today. Crude oil's come back down some. That right there is tied into the whole situation, the crude oil. $59.32. It's come back down under $60. It's down 29 cents on the day. It's back down under $60 again, and we're looking at down 0.5% down today so far. U.S. Treasuries today. Let's see what they're doing. I don't think that they're going to allow the crude oil price to go down too low. I think that they'll control that, and at any rate, I don't think they're going to let it go down too low. And when it starts to move down into the 50s, they don't like it. Look, it says right there, Dow Jones record high. 150 points as U.S.-Iran tensions decrease. Okay, we're looking at now. You know what's funny is? I find it almost weird. Okay, it's not funny as in funny. It's funny as in weird. Okay? The fact that Iran strikes and that eases tensions. I mean, that's just weird. That's kind of bizarre. Anyway, we're looking at Dow Jones up today. Not the Dow Jones, I should say. The U.S. Treasury bond yields are up today. Sorry for that. Well, anyway, we're looking at rising yields today. Mostly on the long end of the yield curve, because the 3-month and the 6-month, they're not rising. They're falling, but ever so slightly. But we're looking at the highest yield rises in around the middle of the yield curve. 3-year, the 5-year, and the 7-year. All the yields are rising 2.2 basis points roughly on those three. And we're looking at a 10-year at 1.89. And we're looking at a 30-year at 2.37 today with rising yields. Now let's take a look at the U.S. dollar. U.S. dollar's up, finding it to be a safe haven asset, but also there's more to it than that. There's capital inflows coming in because the dollar looks like the best place to invest money. We've still got positive yields in the American dollar. Also, there's dollar-denominated debt, a lot of debt that these smaller countries have taken out, and they have to pay that back, and so they have to buy dollars, and so it's increasing dollar flows. The dollar is becoming, and also what's it being compared against in the basket of currencies? It's being compared mostly against the euro, and so we could actually see rising inflation rates at the same time we have a rising dollar. And in fact, we've already actually seen this phenomenon. The dollar has risen in the past number of years up. It was a lot lower, and the dollar had more buying power back then. You could buy more with it. Quite simply, a few years ago, the dollar index was like 78 or 82 or something like that, the dollar index. But your dollar, you could buy 30% more with it back then than you can now. So we've saw inflation in these years since the dollar index has risen. We've actually saw inflation where the dollar doesn't buy as much as it did back when the dollar index was lower. And so this is kind of proof that the dollar is actually losing purchasing power at the same time the dollar index is rising, which is a weird phenomenon. Listen, thank you guys for listening to this report. Like and subscribe, and we'll catch you guys. Give me a thumbs up, and we'll catch you guys in the very next video. Bye-bye, guys.